Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, PolarFuturesGroup.com. Welcome back to the show, Victor.
Well, thank you, Jim.
Of course, the most paid attention to midterm election in U.S. history. Well, right after the election, what happened and what do you think is going to happen?
Well, we had as far as the stock market's concerned, we had the Dow Jones jump 550 points the day after the midterm elections. Why did that happen? A few things. I mean, first of all, we'd been up for the previous 6 days. We had a very sharp sell-off through October, made some lows there late in October. And I guess from the October lows, which were, I'm going to say, the 26th or thereabout, until the day after the midterm elections, we had the Dow jump 2,000 points or thereabouts. So that's a pretty major move. I mean, we've had some big swings here in the last couple of months in the Dow, both up and down. So let's say, the market had been really hammered to the downside, was on a bit of an uptick, and it seemed as though the market took the results of the elections as kind of good news. I think it was pretty much as expected, honestly. But I think the rally really kind of kicked in a high gear on the day after when Trump was having his extended visit with the press. What do they call it? A press conference. And he indicated that he'd be sort of willing to work with the Democrats if they were willing to work with him. And the market, I think, was in any news is good news point of view at that time, and we had a run-up. The strategies that I had on, I was long of the stock market in my short-term trading accounts from, I guess, early this week. And I said, thank you very much, took profits on my positions, and I've now gone back to looking for the market to weaken a bit. I think the top, the all-time high, actually, in the Dow and in the S&P that we had in early October, late September, that period of time, is maybe a significant turning point. And I'm looking for this rally we've had off the October lows to roll over. That's my short-term trading view, and of course, I can change my mind on a dime.
Yes, and how much will that dime cost us in silver?
Hard to say.
President Trump has been critical of the Federal Reserve and the chairman in particular for raising interest rates, calling him, I think, by the biggest risk to me. Do you think the president's criticism is going to change Fed policy?
Short answer is no. Powell may not have expected that criticism he's received from the president, but as we've come to know, I mean, Trump does what Trump does, and I think the Fed is going to stay with their program. I mean, the last Fed meeting this week, they made it clear that at least in market, as clear as can be, the market's really expecting them to go ahead and raise rates again in December. They will probably raise rates more as we go into 2018. They say they're data dependent, so in other words, instead of paying attention to what the president's going on about, they're going to be looking at the data in front of them. And I think, again, the last meeting they've had here this week, they made it clear that the economy looks to be in great shape. And I guess the view is, if the economy is in such great shape, what are we doing with interest rates so low? So I think the signal clearly is, and the way the market took it anyway, that is the stock market, the credit markets, the currency markets, they took it as though the Fed's going to stick to their guns and keep chugging rates higher. So that's what I think is going to happen on that front.
We'll have more with Victor Adair right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Victor Adair. Victor, in previous interviews, we've talked about the divergence between central bank policies. Basically, you saying the American Central Bank has been tightening money policy, while other major central banks, especially Europe and Japan, have not. And you say this is an important reason for the rise in the U.S. dollar. Do you think this is going to continue?
I think the policy divergence is going to continue. The Fed seems to be, as I just was saying about interest rates here, that they seem to be pretty determined to stay the course. The other major banks, the ECB in Europe, the Bank of Japan, the Bank of England to maybe a lesser degree, even Canada, Canada of the bunch of them seems to, at least our central banker seems to be indicating that he might raise rates, but whether they do or not, that is, whether the other banks raise rates or not, I think they will fall behind, as it were, the Fed, or the Fed will be tightening more, and all else being equal, that is bullish for the U.S. dollar. Now, in terms of will the U.S. dollar continue higher, that has kind of been my general view of things this year. I mean, I've been U.S. dollar bullish. However, with the trading that I do, I really pay attention to the patterns that I see on the charts in the markets. And we had the U.S. dollar index, a basket of currencies that make up that index, trade at its highest level in 16 months, the very last day of October. That same day, by the way, the euro currency was at a 16-month low, and the Chinese currency, the RMB or the yuan, was trading at a 10-year low. And both of those currencies look like, there was possibility that they were going to break lower. However, we came back here the first day of November, and we had the U.S. dollar weaken. The first 2 days of November, the Chinese currency had the biggest rally, the biggest two-day rally that they'd had in, I don't know, about 10 years or something. It was a very sharp turn, and I was very impressed with that very sharp turn. Over the years, I've noticed with currencies that the trends continue and just go further than you may think makes any sense, but then when they turn on a dime and go the other way. So it leaves V-shaped patterns on the charts. So I'm still predisposed to thinking the U.S. dollar goes higher, but there's a very interesting potential V-shaped turn that was made right at the end of October, beginning of November, and I'm going to have to really to keep an eye on that. That may have been, in other words, a turning point for the U.S. dollar. You look back off a bit and look at the bigger picture. Why was the U.S. dollar stronger in October? Any number of reasons. One, the Fed tightening, as I talked about. But I think, in a way, what really happened in October is all around the globe, stock markets got a little bit of wobbly, got some fear in them. And in that kind of environment, we call it risk off. I think it's more than likely that the U.S. dollar gets stronger versus other currencies as capital, in effect, comes to America looking not just for opportunity, but also, or maybe particularly, looking for safety. So I think that was one of the things that caused the U.S. dollar to do as well as it did in October. And as we got to the end of October, I mean, before we got there, we had this key reversal day, late October, in the stock market. So maybe people are going, hey, well, no need to be quite as afraid as we were. And it showed up in the currency markets as we got into November. We'll see. That may be a short-term thing. If the stock market gets another case of the wobbles, U.S. dollar would probably get bid and go higher.
We'll have more with Victor Adair right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Victor Adair. Victor, as we get closer to winter and more imported veggies, will we be seeing $8 cauliflower again because the Canadian dollar has fallen so low?
I don't know. What's cauliflower trading at these days?
I have no idea. I don't do the shopping, but I do remember the shock of an $8 cauliflower. So we had a high for the Canadian buck around 78 cents in September. Since then, it's down 2 cents. What's driving the Canadian dollar, and where do you think it's headed?
Okay, big picture with the Canadian dollar, there's interest rate differential between us and the United States is always an important factor. The relative strength or weakness of the U.S. dollar vis-a-vis all the other currencies of the world is important. You know, if the U.S. dollar is going up against the euro, is going up against the Swiss franc, the British pound, the Japanese yen, you know, the Australian dollar, and so on, it's probably also going up against the Canadian dollar. And then generally, again, commodity prices, and within that, especially oil. But I remember seeing at conferences years ago, and I'd put up these big charts on the wall and say, one of these charts is what the Canadian dollar has done for the past few years, and the other chart is what a basket of commodities have done over the past few years. Can you tell them apart? And really, you can't. You know, from time to time, there's other things that are important. I mean, recently this year, the concerns about NAFTA were important to the Canadian dollar. Maybe deeper in the background, you know, the real estate market in Canada, the level of consumer debt we've got here, the foreign capital that'll come in and out of our capital markets. Let's say even, you know, I wondered this year if the fact that we had all of these cannabis stocks, and we saw in the brokerage community, you could see it, you know, huge capital flows coming from outside Canada into Canada to participate in those stocks. And then I also wonder if when the rest of the world is sending money to the United States just to diversify for some safety and opportunity, whatever, if some of that money doesn't spill over into Canada. It's like, you know, okay, put 95% of it in New York and put the other 5% in Toronto or whatever, just so we've got it out of where we're coming from. So I think those are some of the things that affect Canada. I've been generally kind of predisposed to be negative of Canada. I think as much as Paul Laws recently, anyway, has been kind of saying, yeah, we're going to keep raising rates too. We should be. I think he may have to back off on that. I think Canada's a little softer than would warrant him, let's say, staying, you know, 1-for-1 with interest rates increases in the United States. At the moment, you know, Canada, the last couple of weeks here, Canada just been trading in a very narrow sideways range. We're seeing above support at around 75.5 cents. If Canada was to break down here, I mean, we keep hearing, and it's so true, Western Canada Select been trading below $20 a barrel. I have to say I'm puzzled actually why Canada isn't lower now, but it is. I'm not doing much with Canada. There's other more attractive trading opportunities, but I'm certainly keeping my eye on it, and I would be I'd be inclined to trade it from the short side if it has a breakdown.
Gold rallied about $50 during September, even though the U.S. dollar was going up against just about every currency. People usually expect gold to fall when the U.S. dollar is strong. Do you think gold is rising because the stock market has been falling lately?
Short answer would be yes. Yeah, I think gold, here's the thing. When you're in a time when gold and the U.S. dollar are rising together, you can probably be guaranteed that there's some stress in the market. Typically, you could say as the euro goes, so goes gold. So if the U.S. dollar is going up, the euro is going down, gold should be going down. But it wasn't in October. So what was the big, the sore thumb, as it were, that stuck out in October? Stock markets around the world are getting clobbered. So I think that's a very good example of, a time when gold and the U.S. dollar move in the same direction, and you have some stress in the markets. Really, over the years, a couple of the main things that impact the price of gold is the relative strength of the U.S. dollar and the level of real interest rates. If real interest rates, that's after you subtract out the inflation number. If real interest rates are rising or are strong, that's a tough environment for gold. So in the current environment, U.S. dollar has been relatively strong. Real interest rates have been higher, and yet gold set a bid. So then you go maybe to the old chestnut of, if you've got a market and it doesn't respond bearishly to bearish news, maybe you should be buying it. I've traded gold from both the long side and the short side. The past month there's been some swings in gold that have caught my attention. I think I'm barely a little better than break even. I haven't done a good job of making money trading gold, but it's certainly it's on my radar because it's behaving a little different than I would have thought.
Western Texas crude hit a 4-year high at nearly $77 at the beginning of October, and since then it's been falling below $61. That's a decline of 20% in, just a few weeks. What's changed on the oil market in the last 6 weeks?
I think what's changed is the market's expectation of supply. I mean, when we were at the end of September thereabouts, the market seemed to be worried that there was going to be a lot of crude disappear from the market because of the American sanctions against Iran. And, it may have been a classic as good as it gets moment for the oil price. Since then, we've seen, for instance, Saudi and Russia both come out and say, that they will increase production a little bit. The Saudis getting cajoled, let's say, a polite word, by the Americans to up their production. Trump didn't want to see rising crude oil prices. He said that in his press conference the day following the midterm elections. Then also, in that period of time, we've seen the inventory counts in the United States for crude and crude products have been rising. And then American production. We just had reports this week here. We've got U.S. domestic production of crude oil is at another all-time record high. They're over 11.5 million barrels a day that they're producing in the United States. So, I think those were, as I say, in a word, what changed is the market's view of supply. Back in September, supply was thought to be scarce, and as we have gone through October, we're drowning in crude, is sort of the short, casual answer as to what's happened. It's had quite a tumble to come off 20%, and I think, we're down about 9 consecutive days here, so maybe we're getting into an oversold condition. I'll tell you, another side here is natural gas. NYMEX, as we call it, that's nat gas that trades in New York, is above $3.50 here. And over the past few years, it's spiked above $3.50 a couple of times in the middle of the winter. But, we're early yet, and one of the reasons nat gas prices are up is that inventories in the United States are low before we get into winter. So we had a cold snap particularly in the eastern seaboard during the winter. You could see nat gas take a heck of a jump. So it's like around a $3.50 or better is about a 4-year high on natural gas, and it's a different market, and that gas actually looks much more bullish, I think, than the crude oil market. And just to finish up with crude, what we call the forward markets. In other words, you can trade crude for today or next month or a year from now or 5 years from now. The forward market in crude has had the swings in those price relationships has been hugely bearish. So, and that's really happened through the month of October as it reinforces this bearish trend we've had in crude.
Also in British Columbia, we had that Enbridge natural gas pipeline explosion, and they're telling us that our supplies of natural gas in BC will be cut down to 80% of what they usually are. Does that affect the North American market?
Not much, really. I mean, think about it. BC burns as much natural gas as one apartment building does in New York. I mean, that's facetious, but no, it's just not as important.
And one last question before we go. You trade in and out of these different markets on a pretty short-term basis. You've told us you may hold a position for a few days or a few weeks, but then taking a look at global macro markets, maybe a longer-term investment might be the way to go. So my question is, how do you reconcile your longer-term ideas with your short-term trading?
That's a very good question, and it's let's see. Here'd be my short answer, and that is you need to keep the time frame of your trading in sync with the time frame of your analysis. So, I mean, of course, over the years, I've watched a lot of clients that would buy something, and when it goes down, instead of getting out and taking a loss, they would decide it's now a long-term hold. And, that just has headed you down the road to disaster. But sure, I mean, I can look ahead. I mean, I can truly picture a scenario where we could be going into a more inflationary environment than the one we've been in. We've got, in the United States in particular, but rising wage increases. Consumer confidence is off the charts, high. Small business optimism has never been so high. In other words, kind of like at as good as it gets sort of a moment. And if we have these wage pressures and prices get pushed up as a result of it, we could go into a more inflationary environment. And then I can also picture that this is the kind of environment where consumer confidence is really high. People are spending money like there's no tomorrow. Restaurant sales are off the charts. You think, wow, everybody's out eating out all the time. And maybe everybody just feels so good, and that's what happens typically just before the economy rolls over into a recession. So I can read research where one guy says, hey, we're headed into inflation. Another guy says we're headed into a recession, not inflation. And everybody's got an opinion, just like taxi drivers have an opinion. And what I really do to keep myself honest, because you can get stuck with a bias. I mean, I really, really pay attention to what the charts are telling me, what the market's actually doing. And often I'll catch myself thinking, well, the market should be doing this, but it's not. So what's wrong with the market? And I go, no, wait a second. It's what's wrong with me. The only way I can make money is to trade with the market. If I try to make the market go the way I want it to and it doesn't, then I'll lose money. So, Jimmy, just a short answer. That's kind of, you can't help but have longer term opinions. Like, where are we going? You got your day-to-day operations of the business that you do, but if you always got your nose stuck to the grindstone and you're not looking ahead and trying to plan, you'd be a fool. So sure, I'm looking ahead, but for my trading, I got to keep it really honest, and I got to be going the same way the market's going, or I'm not going to be making money. And the easiest way for me to do that is to really pay attention to the charts.
How about people looking ahead to their retirements? Time to get into less risky things where you're guaranteed a return or you won't lose your money?
Yeah, I have said for the past few years when I'm asked, what is the biggest mistake investors are making these days? That I would say, reaching for yield. And I understand it. You get paid nothing, basically, to have your money in a bank account. So you are encouraged by the people who have got interest rates so low to go out and take a little more risk than you normally would or should. And of course, in an environment where when you go out and do that, you get rewarded. Hey, darling, I bought some marijuana stocks today and we're up 10 grand. Let's go to the restaurant or buy a new car. So people, when you get rewarded for taking a little more risk, then you take a little more. And maybe sooner or later you find yourself in a spot where you've taken on more risk than you should have.
Victor, thank you so much for chatting with us.
Jim, it's always a pleasure, and we never have enough time. So I look forward to doing this with you again.
My guest has been Victor Adair, co-founder of the Polar Futures Group. His website, polarfuturesgroup.com. If you have any questions for Victor or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.